Good morning, and welcome to the Hedge Trade Daily Risk Brief for May 25, 2026. Today we'll review the current market landscape and key risk themes across major asset classes. Starting with the overall market regime, the S&P 500 remains in a strong uptrend across all major timeframes. Over the past 14 months, the index has advanced roughly 15%, with moving averages from the 10 period through the 200 period aligned in a bullish formation on both daily and weekly charts. Momentum remains positive overall, although some signs of near-term fatigue are beginning to emerge. The VIX currently sits at 16.59, indicating a relatively stable risk environment without major stress or excessive complacency. Looking at the S&P 500 projection framework, price continues to trade just below a key resistance band between 7,500 and 7,550. The broader structure remains constructive, with higher highs and higher lows intact since early 2026. Weekly indicators such as MACD and ADX continue to support trend continuation, although shorter-term oscillators are becoming mixed. The RSI is elevated near 75, which often signals the potential for a pause or consolidation phase. Key support zones remain at 7,400 and 7,350, which would represent more favorable entry areas on any pullback. Turning to the Nasdaq and QQQ structure, the Nasdaq 100 remains aligned with the broader equity trend and is currently trading near 29,814. Momentum remains cautiously constructive, although short-term signals should continue to be monitored for any weakening. Small caps, represented by the Russell 2000 near 2,905, also remain constructive and consistent with broad equity participation. On the volatility dashboard, the VIX remains stable and supportive of the current risk-on environment. However, momentum divergence near resistance levels suggests the possibility of a shallow consolidation rather than an immediate sharp reversal. From a risk management perspective, a daily close below 7,400 on the S&P 500 would introduce near-term bearish pressure, while a sustained move below 7,300 could begin to threaten the intermediate uptrend. Looking at overall portfolio posture, the stance remains cautiously constructive on equities. The broader trend remains intact, but chasing longs near resistance is not ideal from a risk-reward perspective. Preferred entries would be on confirmed pullbacks toward the 7,350 to 7,400 range, or on a clean breakout above 7,550 with confirmation. Gold and Bitcoin remain neutral to constructive, while USD/JPY continues to trade without a strong directional bias. In summary, the market remains structurally bullish, supported by broad momentum and stable volatility conditions, although short-term exhaustion signals suggest maintaining a disciplined and measured approach. Thanks for watching the Hedge Trade Daily Risk Brief, and I'll see you tomorrow.